Because we've heard a lot about stablecoins for payments, stablecoins for remittances. And while we've seen that market grow a lot, really the bet on Circle right now is, or at least it's this growth of DeFi. Almost the stock itself represents, how much USDC will be in DeFi and how big DeFi will become over time. And especially now that people are saying, let's tokenize equities, let's token all these things. They traded on chain. If they could settle in USDC, that could be potentially huge for the company.
Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. You might be thinking, wait, am I on the right podcast feed or YouTube channel right now? Don't worry. You are. You're just hearing a new voice and seeing a new face. My name is Anthony Yim, co-founder of Artemis, and welcome to Stablecoin Stats, a monthly show on the Tokenized podcast feed dedicated to the stats behind the stablecoin market. Joining me today is my colleague and friend, Andrew Van Aken, data scientist at Artemis, also known as Albardo on the interwebs. Welcome.
Thank you for that kind intro. And I don't recognize the background behind you. Are you sitting somewhere new today?
Yes. Very exciting news. We have officially gotten our insurance for a new office, and we are moved in as of 2 hours ago.
And everything was smooth, right? No hiccups. You're on Wi-Fi or not?
Yes, everything is extremely smooth, except for the fact that there's the toilet seats are broken, the Wi-Fi is not working, and none of us were allowed up the elevator this morning because we didn't have access. The usual startup stuff.
Oh, it's a good thing we're not an internet-based data company. So that's good.
So, how was your weekend? Nothing happened in stablecoin land in last week,
Nothing happened in the stablecoin world. No companies went public. There was no fanfare. The IPO was not underpriced. It was all just smooth sailing. Of course, we're joking. If you missed it, Circle filed for an IPO at $31 a share, and then couldn't quickly trade up because the market literally could not open until the bid-ask spread was determined around I believe it was around 70 or so, and now I believe it's trading around 120. So exciting times in stablecoin world.
I believe NYC halted trading 3 times in the first day. This is actually the first time I've ever heard of exchanges halting due to how quickly the price is going up. I've only maybe that tells you how many recessions I've gone through. But I've only heard of exchanges halting when something's trading down so much.
Well, that's the beauty about crypto. Things never get halted. People just keep trading on. We keep marching upwards.
That's true.
Did you expect it to be so extravagant?
I did not, but my co-founder did. We actually built. This is a shout out to our little financial model that we built, and I think people misunderestimated how much supply Circle gained in the last 6 months. And really, if you look at its supply, the amount of interest revenue they're making, their multiple, I think it's high. The multiple is definitely high, but it's not like insanely high. And I think if you assume that Circle continue to dominate these more sort of traditional, if they partner up with Visa, they partner up with these traditional banks, they continue to operate in the United States and increase their market share here. I think they can grow into their market cap. It's not insane. I think the obviously the Circle's being traded for its future, I think, promises and future earnings.
Well, if city projections of trillions of dollars of stablecoins are true, then the Tokenized podcast will exist for many years to come. So cheers to that.
Cheers. A quick disclaimer before we get into things. I need to remind you that the views or opinions of our contributors today are their own and do not necessarily reflect those of the companies they're representing. Nothing we say should be taken as tax, financial, investment, or legal advice. Do your own research. And lastly, before we get into the stats, I'm thrilled to remind you that this podcast is made possible by Visa and powered by Artemis. So, of course, this month's star company we want to focus on is Circle. They had a big IPO, and today, of course, we're doing a USDC deep dive. Um, Circle's IPO has exploded out of the gates and is into public markets with ferocity. IPOing at $31, but I think as of right now at noon Eastern time, we're still at like $100 something. That's 3x in like 24 hours, right? 48 hours.
So you would say the market likes stablecoins. Is that fair to say?
The market really likes stablecoins, and it really likes Jeremy Allaire and Circle and what they're doing. I think the market, yeah, I mean, really believes in the future of Circle's growth. And I think you have a lot of cool metrics this today about USDC.
Yeah. So let's kind of like understand and take a step back of where Circle started and kind of like what is USDC used for in the ecosystem. So if you're listening at home, right now we're showing a chart of USDC supply growth over time, essentially how much USDC is available right now. And so during what we would call like the bull run of DeFi days, USDC spiked at around like $50 billion or so, and then really got killed during the bear and fell all the way down to almost $20 billion outstanding, which it was driven by a lot of different factors, such as no one will forget the day that Silicon Valley Bank went under. I think I had started a new job, and I was 5 days in the job, and I was at a venture capital firm, and they said, "Hey, our bank's going under." I was like, "Oh, great! That's a great way to have a Friday." And so,
I mean, our bank was going under. I don't know if this is TMI for the audience here, but we had, luckily we didn't have all our capital in said bank, but we had a little bit, and we were definitely a little nervous. We were like, "Oh, should we go to the bank branch and get our capital?"
always a fun day as a startup. So since crypto prices have rebounded, USDC right now actually almost sits at an all-time high of around $60 billion. So the big question is, what is driving what is driving this supply, and what entities are holding different stablecoins? So before we go to the next slide, Anthony Yam, can you guess what the biggest drivers of USDC are?
Mm, I would guess DeFi. Um, I would think, I think USDC is, I understand it as the collateral of choice in a lot of DeFi. Um, but I think before there, I do want to like point out what a momentous occasion this is, that Circle has sort of reached some all-time high. Because I think for the longest time, especially as post FTX and everything, they were really losing a lot of market share and in terms of supply to Tether. But I haven't seen these charts yet, actually, until right now, and I think that that ramp in the last 3 months is incredible. Last 4 months.
They must be doing something right. So what's interesting is that one of the biggest drivers for Circle in the last 3 months or so, or last 8 months or so, has been really Binance. So back in January 2024, during the sort of like the lulls of crypto, there wasn't really a lot of USDC on Binance, only about $1 billion or so. But as the year grew on, it grew slightly, and then Circle actually announced a partnership with Binance, which absolutely exploded in terms of supply. So now that we estimate there's about possibly $9 billion of USDC sitting on Binance right now, which is a lot, especially for an exchange that is dominated by Tether pair trading. So the majority of crypto trading on Binance happens within Tether. And so there's really this demand for USDC on these offshore exchanges. And then look at that. Look at how correct you are. The other top three drivers of USDC in the past year has been Athena and Hyperliquid. Um, yeah, it seems like people want yield and people want leverage. How does it? What do you think of this?
I think the ramp up in USDC and Binance is incredible. I mean, looking at this, it's like a 9x increase. And I think, like, I think a lot of the hesitation around the Circle IPO is around also just like the sheer amount of dependency that Circle has on Coinbase. So it's really interesting to see them like diversifying out of Binance and also diversifying out of the United States. I mean that's big. That's like they're entering sort of enemy territory, right? Like Tether is known as the stablecoin of choice for BRICS, ex United States and ex Europe countries, but and Binance is sort of the Coinbase of these countries, and seeing sort of Circle take a bite out of Tether's sort of home field is interesting.
Yeah, I think it's especially interesting because we've heard a lot about stablecoins for payments, stablecoins for remittances. And while we've seen that market grow a lot, really the bet on Circle right now is, or at least it's this growth of DeFi. Almost the stock itself represents, how much USDC will be in DeFi and how big DeFi will become over time. And especially now that people are saying, let's tokenize equities, let's token all these things. Will be they traded on chain? If they could settle in USDC, that could be potentially huge for the company. One thing we want to point out, though, is when we look at where the largest amount of USD sits right now, it's important to note that Coinbase historically does a very good job of trying to hide how much money they have on their exchange, and for good reason, because centralized exchanges are very much honeypots in which people can, try and hack an exchange and pull money out of it. And so, but we know from regulatory findings that Coinbase has about 20% of the USD supply right now. So for those listening on the go, right now we're looking at who is the largest holders of USDC as of this past month. And we clearly see Coinbase and Binance. Coinbase with about 12.2 billion USDC and Binance with about 8.6. So right about there, you have about 1/3 of all USDC held in these centralized exchanges. From there, it's a huge drop off. So Hyperliquid, MakerDAO, Athena, what we're calling Gnosis safes, or these Ethereum-like products that serve as vaults, essentially. But what you can really tell here is that really the largest drivers and what people are using Circle for the most is, DeFi applications and really, crypto trading as a whole. And so it's very interesting to see that, DeFi has been growing over the last few months, and really this Hyperliquid, once they drop their token, it's accelerated trading volumes, and Circle's really benefiting from this.
Wow. I mean, yeah. Again, for the audience who are listening at home, just this graph is just exhibits just crazy like power law effects. You can see really centralized, like something like, I think just eyeballing this, right? 70% of supply sits on centralized exchanges. I feel like if you ask like you pull a congressman aside or something, and you ask them, hey, like, what percent of stablecoins, do you think is, on DeFi? They'll probably be like, oh yeah, it's mostly on DeFi. But really, most supply is in these like pretty regulated entities like Coinbase, and Coinbase is a public company.
Yeah, exactly. And it's hard to say what people are doing with these stable coins when they sit on exchange. It possibly could be, holding to escape from inflation, crypto trading, possibly even just earning a better yield. Coinbase pays a pretty good yield on USDC. So there's certainly a lot of different use cases for just having, just being able to hold one stable coin. It opens you up to many different things within the blockchain ecosystem. And so really to hammer this point home about DeFi, and I think one of the things the market, once again, really, kind of misunderstands is, what the USDC dominance in DeFi looks like. So here, to really drive home this point, we're looking at, of all the stablecoins that sit in DeFi, which stablecoin is most dominant in the DeFi setting. And we can actually see that Circle's USDC accounts for about 50% of all the stablecoins in DeFi. And so Tether is actually a lot less. Tether is only between about 10 and 15% utilized in DeFi. And there's also a lot of other stablecoins as well. We're not going to go in the whole laundry list of, hundreds of other stablecoins exist that for various DeFi purposes. But really, since 2024, Circle's done a really good job of pushing stablecoins into DeFi and really almost crowding everybody out. So this really drives the point home about how much of Circle is really dominated in DeFi. And to really to drive home a real world example of this, you see companies like Maple Finance, and Maple Finance offers almost like private credit like opportunities for investors. So if you have USDC, you can deposit it into many different Maple Finance pools, which then get distributed to different almost private credit-esque opportunities. And you can see here that, starting in March of last year, the gap between USDC and Tether has, exploded. So what we're looking here is about, in early 2023, there was about roughly between 60 million of USDC versus 20 million of USDT on Maple. Now there's about close to 350 million of USDC and just under 50 million of USDT on Maple Finance. So it's interesting that the DeFi market is kind of like looking at Circle as almost the preferred coin for DeFi like activities. And this is just another point to sort of like illustrate how recent demand has taken off. Now that we know that where Circle dominates in the landscape, let's look at where the possible opportunities are. So this is what we're showing here is data from our recent survey with Castle Island Ventures and Dragonfly, where we looked at of payments companies and of payments companies facilitating B2B, B2C, P2P transfers, what stablecoin are these companies using? And here you can see almost the flip side. Tether is almost used in 85% plus of these types of transactions, while USDC is only 15%. And so when we got this data back, Anthony, did this surprise you at all?
No, not at all. I mean, I think just anecdotally, as I was talking to these 31 different stablecoin companies that are, we were including in this report, almost universally, everyone was just saying how deep and liquidity is on Tether, and that it's also oftentimes the cheapest by far in terms of payments. And so I think for me, this graph really confirms what a lot of us in stablecoin payments and stablecoins are always known, but couldn't quite put and sort of didn't have empirical evidence to prove.
Given that USDC trails Tether in payments, what, Anthony, should Circle be thinking about or doing to increase their share here?
Yeah. I think it's a great question, Andrew. I think there are two main things that come to my mind. So first is for Circle to just work really closely with banks. And I think that's where they're really uniquely positioned to do so, to offer just better liquidity for the markets that can most benefit from stablecoins. And so we hear over and over again that one of the reasons, or actually the main reason people choose Tether is that it's just cheaper to on-ramp and off-ramp and cheaper to do an FX swap. And so in addition, so Visa, Artemis, and Castle Island Ventures did a global survey of 5 geos, emerging market geos, last year. We also did a report, but it was more qualitative, and we surveyed people why they choose Tether and why that's their preferred currency. And I think that one of the major takeaways is that people don't particularly have a loyal to the brand Tether. They choose Tether because of trust. It's what their friends use. It's what their business partner uses. But when asked on whether they would go and use another currency, most people are like, yeah, I think what they care most about is just cost and price. People are extremely price sensitive in these markets, and so I think in that end, to that end, I think Circle has incredible opportunity to be able to make a dent in market share. It's all about just basically offering lower costs and more liquidity, and build these relationships with the parties that can provide the most liquidity, which are typically banks.
Yeah, exactly. And definitely want to give respect due to Tether, who for more than almost a decade now has been, building these relationships on the ground, country by country, off-ramp provider by off-ramp provider to really provide that liquidity. And so it's certainly something that doesn't happen overnight. You really need to send people to the ground to these, over-the-counter, little kiosks to really drive liquidity home. So yeah, props to Tether.
So, shall we talk a bit about market overview and growth, Andrew?
Let's dive into what are we seeing in the stablecoin market and what does the data look like? And the most basic stat that we can look at is how much stablecoins are in existence. And so this past month, we've hit yet another high, $250 billion in supply, closing up on it. Stablecoin supply is up almost 47% year over year. And in the past few months, it's really driven by Tron and Ethereum. And what the interesting thing here is they really do two different things in terms of how they move stablecoins. And as we know, Tron is primarily this peer-to-peer blockchain that people use to send B2B transfers, P2P transfers, and Ethereum is really, this DeFi-driven chain where people use it for trading, lending, et cetera. And so it's really interesting to see that these two chains have really, picked their swim lanes, if you will, and are both growing within these different use cases. Anything you want to add here, Anthony?
No, I mean, this chart is incredible. It makes me, yeah. I mean, I think I wish I can show this chart to Jack Zhang at Airwallex.
Yeah, the supply keeps going, and we stay happy over here. And you can see, yeah, really once again, supply on Tron, Ethereum, and also these lower cost chains too, Arbitrum, BNB, Polygon, really been driving supply recently. And we've actually been seeing a lot of these low cost chains starting to raise money, such as Plasma, which is really this low cost chain. Curious your take on, how do you think these low cost chains should market themselves and go to market, Anthony?
Well, I think one really interesting one here, the number fifth top chain with the largest inflow is Polygon. I would say, at least in our little crypto bubble here in America, I haven't heard of Polygon too much in the last year. But as you remember from our recent payment report, Polygon has massive penetration in payments in India, which is no surprise because I believe the founders are from India, and so that gets me thinking maybe there is a localized chain kind of play here where it's hey, maybe Tron is the chain that serves the Asia and LATAM brick country kind of use cases, and maybe Codex or Ethereum serves the West, the Europes, the Americas, and so maybe that's one way.
Yeah, for sure. We definitely see regional adoption of different blockchains, especially in when transactions are posted on a timestamp. Often we see Tron really spike during Asia hours, but have not as much as activity in the United States and Western countries. And we do have to mention, Solana has been losing a bit of supply recently after really a meteoric run in the past year. Most of that actually supply that's being burned came from Binance actually burning over $1.5 billion of USDC. Not exactly sure, what they're doing there, but it could be, seeing less demand for some different types of trading activities on Solana. But we do want to note Solana has still had this absolutely meteoric rise in the last year, and is, the one of the third largest chain with stablecoin supply right now.
So you're saying that even though USDC has been going up in supply on Binance, they're also simultaneously burning a bunch of USDC, but specifically just with Solana?
Yeah, exactly. So a lot of these exchanges, they see demand for different chains, and so oftentimes they'll move money back and forth to different chains. So for example, you might see a transfer from Kraken on Arbitrum back to Ethereum if more people are shifting from Arbitrum to Ethereum. So they try and it's almost a supply and demand game here. But yeah, so maybe Binance was seeing less activity from their clients on Solana, and so they moved it somewhere else. But yeah. Always ebbs and flows. And then if we cut this data by stablecoin issuer, we can see, once again, Tether is the dominating force here, followed by Circle. They have over, 85% plus of all stablecoins outstanding. And so those two chains really those two issuers really continue to be the driving force here. Um, yeah, curious your take on it. Does anything jump out to you?
No, I think this is still exactly what we expect. There's this like duopoly right now in crypto, and but I think the cool thing here is that the other category is growing, and so I think that's where a lot of new we're seeing new chains pop up, yeah, new issuers, sorry, pop up day in day out. I think every week there's a new issuer, and it's interesting also to see that supply go up, and I think we'll have to see if it stays around. But I'm very excited to see kind of how it all pans out.
Yeah, we've been seeing a ton of innovation in stablecoin land, everything from, delta neutral yields to auto rebalancing of lending pools. It feels like it's still so early here, and lots of innovation can come out between how people earn yield, how people make transactions, et cetera. And so here, when you look at the top coins, how they've gained and lost. Right now, we're looking at a chart showing that USDT gained over $5.5 billion in supply in the past month, with Circle around 1 billion. So you really see that that shift or that new demand coming to Circle, Tether, and then a whole bunch of people experimenting with different stablecoins. Now let's dive into some emerging trends of where we're seeing different stablecoin adoption in the past year. And recently, Artemis, Castellan Ventures, and Dragonfly released a survey of stablecoin adoption, actually, of many different types of countries. Anthony, you want to walk us through that survey and just give a brief overview of what we did?
Yeah, for sure. And more specifically, this is on stablecoin payments, and so frankly speaking, we as a data company, we were sick of people asking us, "Hey, how much stablecoins are being used for payments?" And we didn't have an answer because a lot of this data requires it's off chain and requires um, working with the stablecoin players and PSPs and orchestrators in getting real volumes that they're transacting, and so we're like, why not just ask them for the data and anonymize it, and let's try to add a lot more clarity to this industry. And so for the last 3 months, we've been embarking on this journey to work with as many stablecoin PSPs um, in the world to basically size the real um, s- stablecoin payment volume um, out there. And so I'm excited to say that now. As of 2 weeks ago, we released a report that shows some pretty incredible stats. And so I think the biggest one is B2B volumes. We asked all these PSPs to sent us data for the last 2 years, and the numbers just been staggering. It's been up 400% year over year. Monthly volumes are at around 3 billion, so it's close to I think like a $70 billion run rate annualized. But since it's growing so much, reality, I think by the end of the December 2025, we're gonna see maybe closer to 90 or $100, 100 billion in annualized run rate, and I think that's super exciting, right? It's like again, innovator's dilemma. It's like the numbers are small. Don't get me wrong, but growing at this rate, I think in a couple of years, people will not be doubting the sort of if efficacy and relevance of stablecoins.
Yeah, in a market where I think Visa in their 2025 Investor Day quoted B2B payments at, almost $145 trillion. So we could have years and years of unprecedented growth in this category and really not even touch the surface of B2B payments. So it's pretty fascinating to see, the launch of this type of market. And now moving to something just totally, completely different. We have synthetic stablecoins return to all-time highs. So you might be thinking, what is a synthetic stablecoin? So we're looking at a chart here of the amount of supply of synthetic stablecoins over time, and it's mostly driven by a stablecoin called Athena, which does something a little crazy. So back in the days of early crypto trading, there's an exchange called BitMEX that existed, and users could deposit money onto but they could only deposit Bitcoin. So if people wanted to take a vacation, which God forbid you do in crypto, and they wanted to hold dollars, what they would have to do is they would have to sell short or an offsetting amount of Bitcoin. So they would hold maybe $50 of Bitcoin, they would short $50 of Bitcoin. And so this would almost create this delta neutral like strategy where your amount of money wouldn't change no matter what Bitcoin did, but you would be essentially flat. But you would also be earning a yield because what would happen is if you were paying to be the opposite end of a trade, you would be collecting what's called a funding rate. And so Athena launched early in January 2024, got off to a slow start, but now we're seeing this like absolutely huge explosion now by Falcon USD and many different other types of stable coins mimicking this strategy. Anthony, can you wrap your head around this one, or what are people? What do you think people are? Why do you think people are really going to this type of stable coin?
I honestly have no idea. um, it's a great question.
My own theory is that people are now, with these government yields across the world slowly going up, and you can kind of like create this almost synthetic dollar that, doesn't have any exposure to governments. You're kind of, and I know it sounds corny, but creating this, internet type yield where you don't have to worry about, hey, what's the deficit spending going to be? It'll be interesting to see, will these types of stablecoins hold up over market conditions? And, are people really, that upset with, governments that they're going to be moving money here? But certainly one that we wanted to highlight.
Well, I think that the thing that I'm curious about is whether the supply is correlated to like trading activity. Presumably, it must be, right? Because if there's not a lot of trading activity, I imagine the rates go down, and there's less incentive to hold on to USDE. Like I remember when I was farming Athena like a year ago, uh, the rates were just like very volatile, and and yeah, I think I'm curious, like if this increase in supply is this a correlated to just like there is more yield right now, or is it increased adoption? I think it would be cool to like sort of like break this down further.
Yeah, exactly. If you want to earn 2 additional basis points on yield, do you want to take into macro crypto trading? Do you want to take all these into factors into play? But certainly there's a market for them, and it's really amazing to see this growth.
Well, why do you think this works now? I feel like there have been a bunch of these um, synthetic stablecoins for a while, and I think a couple of people have tried it before Athena. What about Athena made it work?
Yeah, absolutely. So probably now you have a situation in crypto where there is so much liquidity to take on this amount of stablecoin. So now we have so many different exchanges. Hyperliquid works across numerous different types of exchanges, and so like really like you have this like huge amount of liquidity that can stomach this. Um, and yeah, that's my thoughts. Then finally, we'll throw a very different one at you. Here we're looking at P2P transfer volume of non-USD stablecoins, and so one thing that we tend to take for granted is that 99% plus of all stablecoin supply right now is in USD, and while there's a very small amount of non-USD stablecoins, some of these stablecoins are starting to get traction. So, for example, Circle's Euro coin has been seeing an increase of trading volume. The Turkish lira coin by Lira has also been seeing increased adoption. Indonesian currencies have also been seeing increased adoption. Yeah, I mean, we could ask the question of why now, or do we think that these non-USD stablecoins will proliferate? But it seems to be the question that everyone's asking. How do these non-USD stablecoins get to even 1% of supply?
I think the answer is kind of simple. It's funny because my mom actually holds my mom was a pharmacist. She lives in Hong Kong. She's she has like a city bank account. Like she in theory has nothing to fear about holding any other currency, but she actually saves entirely in US dollar. And I think this is a good illustration of the fact that despite the political turmoil in the United States, I think largely people are still very, um, or at least like the United States is sort of the still the most stable economy, and the most stable country in the world. And there's still a lot of like confidence in the U.S. economy, and so I think that extends to almost everyone in the world, and that cements, at least for now, this like dollar appetite in the world, and that I think that it's as simple as that. Like everyone knows what the U.S. dollar is.
Yeah, completely makes sense.
Well, thank you, Andrew. I think that's all the time we've got for today. Thank you so much, everyone, for listening and watching. Andrew, where can people find out more about you?
Yeah, you can follow us at Artemis on X or LinkedIn, and hopefully I try and respond to all the DMs that come our way.
And if you haven't already, please subscribe to Tokenized on Apple, Spotify, or whatever podcast application you like to use. Finally, if you enjoy this and you want more, leave us a review. It really helps us and others find the show.
Stay stable, everyone.